Netflix reported quarterly financial results after the markets closed on Thursday, October 17th, that were pretty good again. The stock price is up roughly 2.5% as of this recording in the aftermarket hours, and I think the stock price would have been up even more had Netflix not already been up so much in 2024 already. So I'm happy about that. Netflix has been on my list of top stocks to buy all year long. I've had Netflix stock rated as a buy for several years now. I really like the business model, the economies and scale, the operating profit margins, and the business of adding content assets while still generating cash flow from operations and incremental millions of subscriber growth. So in this video, I'll review Netflix's latest financial results, and then I'll update my recommendation for Netflix stock and let you know if I still think it's a top stock to buy or if it's now time to take profits in this streaming pioneer. So let's take a look. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. All right, so Netflix reporting third quarter revenue increase of 15% year over year and operating profit margin of 30% compared to 22% in the same quarter last year. Those results have Netflix raising their guidance for 2024, now saying they expect revenue growth of 15% instead of 14 to 15%, and operating profit margin of 27% instead of 26%. So this year has gone much better than Netflix has expected. The company's strategy of stopping password sharing and adding ad-supported tiers has really worked well. They're adding a lot of subscribers that were previously sharing accounts, and they're adding a lot of subscribers that previously may not have been interested in joining, but with the lower priced ad-supported tier, they're now joining. In fact, management said that in the markets where they offer ad-supported tiers, 50% of new signups were for ad-supported services. So you can see how strong demand is for ad-supported versions of Netflix. It looks like consumers don't mind watching a few advertisements while paying a lower price to access the service. Company said ad membership was up 35% from the previous quarter, and their ad tech platform is on track to launch in Canada in Q4 and more broadly in 2025. Remember, they only recently started this ad-supported version. It's not that seasoned just yet, so it's going to improve over time as the company gets better at launching this service. And then as they look ahead to 2025, they're focused on improving every aspect of their service and continuing to deliver healthy revenue and profit growth. And I like to see that from Netflix. The company's opportunity in its existing business is so good that I don't think they need to focus on anything else other than just do whatever it is that you're doing and keep looking at ways to do it better, right? The company is the streaming pioneer, and it's withstood all this competition that's entered the streaming space. Nobody's been able to capture the success of Netflix. Nobody's anywhere near the 30% operating profit margin Netflix generated in its most recent quarter. While others might have the millions and hundreds of millions in the case of Disney, they have over 100 million subscribers across their streaming services, but they have yet to achieve the economies and scale that generate the kind of cash flow from operations and profit margins that Netflix is generating. So they've proven that consumer demand for this product is very good and increasing, and they've proven that they can serve this market very effectively. So there's no reason to go outside of this area. In fact, a couple of years ago when they started talking about going into gaming and doing more gaming investments, I was not happy about that investment. And I'm glad they're not talking too much about the gaming side of their strategy. I would want them to, kind of not do too much there just yet, because the opportunity here for streaming is so large. I don't want them to focus any energy, any capital outside of this opportunity. It's still very early days here. They have 282 million streaming subscriberships, and they've talked about how the total addressable market is over 500 million households. So they still have over 200 million households that they can reach with their service. And that total addressable market is only increasing because of how much more convenient it is to get your access through a streaming subscription versus getting your content through a cable connection or a satellite connection. So the tailwinds are still there. The opportunity is yet to be completely saturated. And so I like that they're focusing on that opportunity going forward. Not everything was good, and I'm going to highlight some of the downsides here from Netflix's latest quarter. And I'm only being picky here because most of the numbers that Netflix reported was really strong. So I really have to dig deep to find things that were not good. And by not good, I mean that's a little something that could have been better. And one of which is the revenue growth number. You could see in the second quarter of 2024, the company was on a streak of 4 consecutive quarters of increasing the rate of increase in revenue, right? The second derivative was in a 4 straight quarter streak of increasing. Well, that kind of ended in this quarter. From 16.8%, revenue growth decreased down to 15%. So that's something you can nitpick at and say, well, that wasn't great. They ended that streak. And then they're forecasting fourth quarter revenue of 14.7%. So that would be 2 straight quarters of decelerating revenue growth. While 15% revenue growth is still solid for this business, it's like if you wanted to pick at some of the downsides from the quarter, that was one of them. Another downside was in the global streaming subscriber additions. So you could see again, they had a 4 straight quarter streak going of increasing rate of increase in streaming additions from 10.8, 12.8, 16, 16.5, and that slowed down to 14.4 in the latest quarter. And at 5 million, that was the slowest rate of increase in streaming subscribers in the last 5 quarters. So again, nitpicking here at the things that you can find that were not great from Netflix in the latest quarter. Still, adding 5 million subscribers to your total of 277 million is a good quarter. Cash flow from operations was really strong, 2.3 billion in cash flow from operations. That was up from 1.992 billion in the same quarter last year. And that's even after the company added billions of dollars in content assets. So they spent roughly $4 billion on new content in the quarter, and they still generated $2.3 billion in cash flow from operations. In fact, if we look at 2024 overall, Netflix has spent almost $12 billion on new content, and they still generated here, if we count 2.2 plus 2.3, that's 4.5 plus 1.3, that's $5.8 billion in cash flow from operations the company has generated, even after spending over or roughly $12 billion on content. Now, the great thing about that is the content that Netflix spent money on this year, that's forever. I should say almost forever, right? Because not all of the content that Netflix spends money on is its own content. Some of it, it's licensing and it won't have forever. But a big percentage of the content that Netflix spends on is its own original content that will stay on the platform forever for future generations of subscribers to enjoy. So as it continues building up those content assets, it just becomes a more attractive platform to add incremental subscribers as the business grows. It grows in different parts of the world that the market is not as saturated as maybe the United States is, or maybe it has a subscriber that maybe cancels their membership, but then when they come back a year later or 2 years later, they find the platform a lot more attractive because the company has added so many more assets, so many more movies and shows and series in the time that they've been gone, that they're like, oh, let me get back to my subscription because there's so much I can watch now that I haven't watched because I haven't been a subscriber for so long. So following today's results, Netflix is now trading at a forward price to earnings of 28.93, which I still think is a bargain considering the prospects of this business longer term, the business model and how lucrative it is and the economies of scale, all of which I talked about already. I still like the stock even after the company reported its quarterly results today. So I will update my recommendation of Netflix stock here. and remind everyone that I still think the stock is a top 25 stock to buy right now, and I'm updating this on October 17th. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.